I don't really know what chart to use. I've probably looked at HBAR in the past, probably Binance. Let's have a look at the US dollar. Yeah, look at that. So I've had a look at it in the past. Let's see what I've done. Oh, wow. So I don't have to do anything. I can see what's going on. It's pretty obvious, isn't it? You've got this 1, 2, 3, 4, 5 from the first market. You've got a deep correction. We're in, we've got 1, 2, 3, 4, 5 here. We've had our first wave. Excuse me, just a little cough. I've talked too much. 1, 2, this is this light blue, 1, 2, 3, 4, 5. That was your first wave. That was the wave 1 of 3. We've come back down for a deep correction here. We haven't invalidated the start point here, so that's good. And October 24, we had another pump. So we're in the wave 3 now. That was obviously more, maybe more like that now. Just kind of, hindsight is beautiful, isn't it? So it's clear that we're in the wave 3, this red wave 3. We've had an impulsive move there. It looks like a it's quite impulsive. There are 5 waves there. You can clearly see there were 5 waves. Wave 1, wave 3, wave 5. It doesn't invalidate the wave 1. Wave 1 actually ends here. So you can see it doesn't invalidate the theory, the Elliott Wave theory. It's like a 1-to-1 on that wave 1. Okay. Then you have this deep correction. You have this kind of, it doesn't invalidate the original move, which was from here. And then you have this next wave, which is just the first wave. It looks like, actually, to be honest with you, it looks like it's the first wave. So we're still in the 3. That's what it looks like to me. So we're still in that wave. That's your 1. 2. Let's turn that to green. So we're in the blue 3 here. We're in the red 3 here. We're in a 3-3 type situation. And we've just come, this was the first wave 1. And then we've had this kind of A, B, C, D, E, whatever, 1, 2, 3, 4, 5. Let's have a look at this correction. There, they ended actually there. A, B, C. Yeah, that's it there. That's your 3. It started. So we're looking for something like this. So these are questions. Yeah, I have questions. So look, this is really bullish, by the way. It's really quite bullish. I think we're in the red wave, and I don't know. I'm not 100% about this. It's like I said, hindsight is 20/20. The reason why I don't know is because you have this crazy wave 1 here, which takes the price of this up 7,000%. It's always possible for this whole thing to be an A, B, C type correction, like a big mega correction, just because HBAR moved so much in the first instance, and so this could trap a lot of people if they're waiting for the 3, the 4, and the 5, because depending on how high you are aiming for the all-time high. But if you reject there and that's the end of the 3, then people are looking for the 5, and that's where they get fucked. And so what actually ends up happening is that would be the end of the blue 5. That's the 3. It would be like that. you get something like this, you'll get like 5 waves, but actually it's like it's just 5 waves in a corrective, mid corrective move of a higher time frame WXY. Yeah. And a lot of people will be saying, yeah, this is great, we're going higher, price discovery to the moon, let's go. But actually what ends up happening is you have this kind of crazy 5 wave impulse, which is this section, but actually it's the W, the X, and then the Y, and you get another kind of whatever. And that it's possible. I'm not saying it's going to happen, I just think it's possible. Because I think it's possible, I think it's worth mentioning. So whatever happens, I think it's highly advisable to aim for the all-time high, and that's it. I don't think it's a smart play to hold higher than the all-time high. Okay, the reason why I say that is because you've got a lot of people invested from these early days here, and back at the all-time high, they're up 2,000%. They might not have taken profit, they're looking for another exit, and that would be a really great exit to just, they'll say, oh well, I missed it the first time, I'm going to exit the second time. They've held, they haven't done anything with their investment, whatever, and they're just waiting for a really nice exit, which will be the all-time high. So the reality is, for me, whatever happens, the all-time high will be your target. How you get there, whether it pumps a little bit higher just to fake everyone out, who knows? No one can really know what's going to happen here. I think it's likely that people are going to get extremely bullish. You might have a failed auction, which is probably the most likely scenario, to go above it and then drop. That's probably the most likely scenario. And so you get a bit of a distribution in and around above the all-time high, fall back into this channel, and then you're back, you're in the bear market, you're looking for a corrective. And then honestly, because this first red one is your one, for this to be correct, this red to be a true free, you really need to go high enough so that this 4 can find support on the top of that one. And so actually you have to go up really high to make this happen, and I just don't think it's very likely. Another 800%, I just don't know if it's likely. After you've already moved so much from these lows to where we are, it's like 500% to go up all the way. That's another it's not likely from these lows. I say the midpoint, the POC to these highs, it's like 3,700%. I think it's unlikely. I don't think it's a high probability bet. I think the bet here is that we do this kind of 5 wave move to complete a potential 3, but fail on the 4 and come back underneath that all-time high. And actually then what ends up happening is this whole move is ends up being some kind of corrective WXY on a higher time frame. I honestly, I don't want to say it's going to happen because I don't know, but for me that's a much more likely scenario, and you get a higher time frame back test of this original value area here in a bear market. And so what you're ending up with is the original 5 waves, and that's whole thing's a correction until you end at the bear market, and that's when your big wave 3 actually begins. And that, for me, that makes a lot more sense, because you have a higher time frame correction, which is a reaccumulation with higher lows to bottom out in the next bear market with a higher low, and then that's when you actually get your crazy mega 3 pump in the next bull market. And then when you do push that high, then you have a chance. Firstly, you're starting a little bit higher, and then you have a chance. You have the right correct situation to backtest this top of this green one to form the correct 4, which is to abide by the Elliott Wave rules. So effectively, on the higher time frame, you have to flip the all-time high into support for a big push into continuation. Now, I can't predict this. I just think that this next wave, all the way up to the all-time high, is probably the right place to exit, probably. Or make sure you're risk-free. Make sure you're taking profit and you're risk-free, so that if you do end up in the future dropping in a disastrous way, then you're not going to feel bad about that, because you've taken your profit. And let's just say I'm wrong and it just goes up a bit further, Yeah, it could go up another 100%. It's not a big deal. Yeah, 290. It's not a big deal. It's not a big gain. The risk is then to the, once you're in an all-time high, the risk is to the downside. You could gain 150 to 200%, but then you could lose like 80% or 90%. And so actually in that situation, the risk is to the downside. And so you have to adjust your position according to the risk. Yeah, I think the all-time high is the target. All right. I don't know if that helps, but that's kind of where I'm at with this. I'm not going to take my lines off just in case I'm right. It'll be fun to watch. Huh? It'll be fun to watch to see how if I'm right or wrong. Okay. So that's that, Defridge. I hope that helps.